Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Sunil Sanganiya. He's a CFA, founder and founder of Abacus Asset Manager. Thanks so much for joining us, Sunil.
Pleasure.
At MarketSite, let's talk about the potential of Indian equities. It seems to be that there's a good long-term investment opportunity.
So, if you actually see the Indian economy, we are maybe 10, 15 years behind the world. But I think that's an opportunity in the sense that that what's happened in other parts of the world is going to ultimately happen to India. So, as we speak, we are like a $2 trillion economy. In the next 5-7 years, we can be maybe $4 trillion economy. And with that hockey stick curve, when the per capita income rises from let's $1,700 to $2,500 or $3,000, a whole host of segments of consumerism of products will just shoot up.
And that's what I wanted to ask you. Where are you looking to generate alpha? Is it in the consumer sector, the technology sector? I mean, 1.3 billion people, that's a lot of pocketbooks ready to go to work.
Right. So I think consumer is definitely a big space. And I always give this example. The largest beer company which is listed on the markets and which has a 55% market share is available for a total market cap of only $4 billion. So there's huge scope to go there, whether you take the example of branded clothes or shoes or personal care items or pharmaceutical. And even if you look at the scenario of the savings, from physical savings you're moving to financial savings. So I think that part of the market also looks very exciting. So whether it's life insurance companies or asset management companies, I think they have a long way to go.
Now, what's the advantage of onshore-based asset managers versus going offshore-based? Why do you want to be invested onshore?
So if you again look at India and you compare it with US, I think there is a lot of similarity. We are an entrepreneur-driven economy. There are a lot of small businesses which can grow big. There are new businesses like e-commerce, healthcare, education, which are starting small because they are nascent. But ultimately, these are the businesses which are going to become large and which are going to give you the desired alpha. So if you're onshore, you can track these companies when they are small. If you're offshore, you will obviously invest only the top 10, 15 obvious names. So I think our view is that if you want to generate alpha, and which a country, a growing economy like India can offer, then it's better to be onshore.
Well, we've seen the improvement in the Indian market even just the past 5, 10, 15 years. Is there still time to invest right now? There's still a lot that kind of potential for growth.
So again, you just have to relate what India is and where India is with some of the other countries in the world, whether it's US or China, where it was 10, 15 years back, or Japan maybe 30 years back, or South Korea, where it was 30, 40 years back. I think we are definitely going to grow from $700 per capita to maybe $3,000 or $4,000 per capita. And that would mean that the Indian economy from $2 trillion would be $5 or $6 trillion. So I think that is the kind of wealth which is still waiting to be generated in India.
Okay, well, thank you very much, Sunil, for joining us at MarketSite. Thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.